Warren, what a difference a few hours makes. Price action is really interesting. Maybe the market's just trying to suss out any kind of talking between the two sides is good news down in D.C., and maybe we'll get a resolution to the shutdown. So let's go positive and see what happens over the weekend.
Yeah, I mean, I think that it's a reverse of the usually you don't want to, if there's potential for bad news over the weekend, you don't want to be long. I think the potential is for good news over this weekend, so people are closing out their shorts, and we'll see what next week brings. I think this has been a market that's really all about growth at this point in time and how that interacts with the Fed. And so you heard a lot about the restaurant stocks there, and just we've seen those types of consumer cyclical stocks really trade in a bad way post the last jobs report back in early September, while AI has driven everything in the market. And so it puts the market in kind of a vulnerable spot. And this recent pullback has happened right after the Fed meeting. So the market topped when Powell last spoke. And I think the market is really needing more Fed support. And so the Fed kind of tried to do that hawkish cut. And I think the market's throwing its tantrum. And this is really all about the bottom half of the K, that in that K-shaped economy, needing more stimulus ultimately. And so that's how I read it, and it's going through the market.
That's what you think this sort of the unsettled market is a result of? Not so much sort of questioning anything about the durability of AI or the spending amounts, the valuations of some?
I think it's about the Fed. So I think the Fed is so they're in a conundrum where they have this K-shaped economy, the bottom half, the real estate market, restaurants, consumer cyclicals. Anyone not in the top 1% really doesn't own assets. They're struggling. And then you have AI and the super wealthy or the ultra wealthy up in the top half of that K. So what they're in is this position where they have to stimulate to help the bottom half of the K. But when they do that, they also blow this bubble or kind of encourage a bubble behavior in the top half of the K in AI. And so I think it is all related, and it is back to the Fed if you look at price action. I don't think that we're in an AI bubble yet. And so it's just a matter of the fact that the AI basket we track is up 20% since the early September. I mean, these things have to take a break. And obviously, even strong earnings results weren't enough to power the group here recently.
I got 30 seconds left. The Challenger data this week was obviously concerning, but under the theory that you're telling me, that probably just means that the Fed is likely to continue cutting, and maybe December isn't dead just yet.
Yeah, no, I think they'll cut in December. It's a matter of what's the path going to look like through that. And I, when I zoom out, because of that Fed support and what the data is looking like, the data we have, the Challenger data, and all ADP data, private jobs data, I think the Fed's going to cut, and it's going to be ultimately an upward drift for the markets. I'd say bullish through year end.